Okay, Saturday 9th of November video for trading starting Monday the 11th of November 2019. I'm Jason Sen. This is a daily chart of the Aussie dollar versus the US dollar. So clearly in a bear trend, so we're looking to sell into any strength. We've had some strength recently up through October, and of course we've hit that trend line, which goes back to December of last year. Let me just scrunch it up again, so you can see that's where the trend line starts. It's a good long-term trend line, 11-month trend line, and that's just held perfectly. So we were shorting up around there, and it's worked really, really well. Although it took until Friday before we saw a significant sell-off. Most of the action last week was pretty much sideways. If you sold as we got to the trend line, or even just close to the trend line, then obviously the shorts did work, but there was a more significant profit on Friday if you were still running that short position. Trading down to the 100-day moving average, the blue line here, so that's offered some support along with the midpoint of the Bollinger Band. That's why we bounced off there, but I think I carry more weight on the trend line and also the 200-day moving average, and also the upper Bollinger Band there at 69, what is that, 69.40? 69.40. So anywhere from 69.20 really to 69.40, there that is a resistance band, but the trend line's doing the job anyway, so we haven't had a chance to even test the 200-day moving average. It's only above the 200-day moving average at, say, a break above 69.50 that the outlook turns positive, because obviously all the negativity will have been wiped out. Now, 68.40, there is a bit of support from the 68.45, a bit of support from the 100-day moving average, but I don't see that as strong as the resistance level. So I think if we're going to break either of these levels, I think it will be to the downside, hitting 68.10, 68.00 is the next target. New Zealand dollar versus the New Zealand dollar versus the US dollar. Now, I thought that this was an inverse head and shoulders pattern. We had a fairly decent downtrend in, we've had a decent downtrend in the New Zealand dollar for quite a long time. So I did think this was relevant. I thought this was a left shoulder head with actually an inverse head and shoulders pattern within the head. You see that quite often, and then a right shoulder. So I thought the break above the neckline here at around 64.30 was going to be bullish. Now we broke up, we didn't close the day above it. We hit the 100-day moving average, and that brought the sellers in. So no daily close above the neckline, and then we've plunged. So clearly this pattern has not materialized. I think we need to forget about that now. I would suggest that we're going to be in a sideways trend. This looks to me like the beginning of a sideways trend, and unfortunately Forex markets seem to be spending a lot of time in sideways trends in recent years. As I scrunch this chart up, you can see, I mean, really, this whole period here is a big sideways trend. That was going on for about a year. Okay, broken up into smaller sideways trends like this one here. Oops, in the New Zealand dollar. Okay, and then this is a big sideways period. Here's a big sideways period. Here's an enormous sideways period which goes for about 4 months. So and this is a really big sideways period here, which was sort of October, was it? November, let's say November through to the end of the first quarter of this year. So I'm concerned because I don't particularly like trading sideways patterns, although they are relatively easy. But I like to jump onto a trend and just ride it. So I'm concerned that this is going to be a sideways period of trading locked between resistance at around the 64.50 area, and then maybe drifting down as far as the 62.00 area to retest those lows. Anyway, we will trade that as a sideways period, and I'll be updating my reports on a daily basis to give you the levels in which to trade. You can see that the 55-day moving average has offered some good support here, and we've broken below that. So I would suggest that continued moves to the downside, at least at the beginning of the week, will happen. 63.00, 62.90 looks like a good next target, and if we get down towards 62.10, 62.00, that should act as support. If I flip to the weekly chart, we've got a weekly bearish engulfing candle showing us that there's very little chance of further gains in this market for now. Another good reason why I would suggest that we can test the lower end of the test the low of the year at around 62.00, and a break below there can't be ruled out, although I do think we are in a sideways period, sideways trading phase. Now I'm going to just try and scrunch this up. Give me a second. And one good reason why I think the downside will also hold is because we've got this trend line going all the way back to 2001. It is a huge trend line, and of course that will come back in at around that 62.00 low. So we'll see if that sideways pattern does develop. When you look at the weekly chart of the dollar yen, you can see we really are in just one massive multi-year. I mean, we're getting on for a 3-year sideways trend here. So it's worth looking at the long-term chart to know where you are. Now, we've had a really good rally recently over the last 2 to 3 months. A good move up last week as we recovered the previous week's losses. We're retesting this trend line, a significant trend line, which goes back to the end of 2016. So again, a 3-year trend line. This should slow the bulls down. Now, I wouldn't be surprised if we continue higher. We've got to 109.48. We're very close to the 100-week moving average at 109.80, 200-week moving average at around 110.00, and this trend line, which is still significant, goes back a year at 110. Where is it now? 110.15. So we've kind of got this 35 pip range of enormously important resistance. I wouldn't be surprised to see us test it. I would be surprised to see us break through. I really think that will hold. So that really should be a nice selling opportunity if and probably when we get there. Actually, I'd really need to see it up through 111.00 before I could turn bullish. But I wouldn't have a stop that wide. I would have a stop probably, yeah, I'd probably have a stop around 110.30. Difficult one on the longer term charts because you can blip 20 pips up through this resistance area, and really it's nothing on the weekly chart. It's really just a speck over the resistance area. So you've got to be careful. You do need quite wide stops. Anyway, we'll see what happens with that. Euro yen has been in a very tight range for about 4 weeks now. So not really much to say there. We have to just trade that range, as I've been writing in my reports, trade the range until it breaks. Where will it break? Well, you can see we are in a bear trend. I need to throw some Fibonacci levels on here. Okay, yeah. As I suspected, the 23.6% fib is holding this. Now, we did blip a little bit up through it. We got to 121.46, it looks like the high. So we've overrun this these fibs, this confluence of fibs, by about 45 pips. But yeah, not a big deal on the weekly chart. So it seems like we're now holding below there. So if anything, pressure to the downside in the euro versus the yen, I would suggest. The stochastics are certainly pointing lower. So we'll see if we break down. We'd have to get up through 122.00, wouldn't we, really, to get up through that 200-day moving average before things turned more positive. Euro versus US dollar. The chart is actually really difficult to read. We're spending long periods of time in sideways trends. I don't know if we're in a sideways trend now. We could be. That's the weekly chart. The daily chart really isn't giving me any information whatsoever. As you can see, the moving averages are actually flattening out and moving, starting to move just sideways with no direction. They are working well as resistance to support levels, although we've just broken through the 55-day moving average, so that looks more negative. I'm not going to spend much time on this because I really don't have a clue which direction this is going, and it really is just in one big sideways trend, and the levels are actually not the best levels to trade, in fact. I cover the US dollar versus Canadian dollar as well, but that's been chart has been a mess for a long time, so I'm not going to waste my time on that today. Right, the Swiss franc, dollar Swiss, has been a good little market for us last week. We were buying it right down here, and what a nice reaction. We were buying it around 98.55, and it bottomed out 98.50 and then rocketed over 100 pips, 120 pips. So if you ran that, nice, and it did get up to where I suggested it would get up to. That's probably the trade of the week, actually. Now, where are we going? We've got through the 200-day moving average, but we're testing quite an important trend line up here from going back to May, and we've halted right at it. 99.79, 99.78, right bang on. Can we turn lower from here? We certainly could. I would certainly think I would feel more negative in the short term if we started holding below 99.50. So if we reject the trend line around 99.75.80, turn back below 99.50, I would suggest that would indicate we're going to be remaining in more of a sideways trend. If we get down anywhere towards 98.70, 98.50, I would definitely be buying it again. We could just trade that range until we get a break in either direction. I think if and when we break, I think we'll probably break higher. But I don't know. We'll wait for the price action to tell us what will happen. I would favour a move back down towards that 98.70, 98.50 area. We get long again. We bounce back up. By the time we get there, the resistance will be stronger because this 200-day moving average will be sort of meeting with that trend line down around probably 99.55, 99.65. So then that will be strong resistance on the bounce, and then of course if we break through there, it'll be a buy signal. But that's something that we're looking at in the weeks ahead. Right, I'll finish up with gold and silver. Not been easy to trade. You can see more recently, gold over the last 2 to 3 months has been quite erratic and directionless. You know, you're getting periods when we're up down one day, down the next. It's impossible to run a position. Therefore, overnight, you just don't know when the market's going to reverse. That was a particularly difficult period, though, that first 3 weeks of October. Well, the whole of October, in fact. Not much easier before then. Now, we seem to be getting some sort of direction. We seem to be creating some sort of channel, as you can see. Right, this trend line from the end of September is now quite well established. It certainly held on the most recent rally. We've reversed from there, so it looks like we could come down to this lower trend line, which is around 1440. That will be our support area, and we'll see if we continue to trade within that channel. Of course, if we break down, that would be more negative. And silver's never really got off the ground in the same way as gold has, and more recently, we looked quite good in this summer rally. We've turned around. We've been hit harder than gold. Big drop last week, so we're about to test the 200-week moving average at 1650. Certainly that acted as good resistance when it was coupled with the 100-week moving average on the way up, on this bounce here. You can see the 200-week moving average doing a pretty good job through this period and this period, so we'll see what happens on the way down here at 1650. It might offer some good support, but the 100-day moving average will probably act as better support and would also be a reasonable target around 1590, 1580 if we break below 1640. I'm going to finish off showing you my new website, Beta. It's in beta phase, beta.daytraderideas.co.uk. Have a look at it. I'm really pleased with it, and I have been posting some free stuff on my free reports page. As you'll see if you visit it, I've been posting some of my reports for free on there lately. There you go. All the reports actually have been posted on there at the end of last week for free on November the 8th and was on November the 7th, 6th, I think as well. So I think I gave 3 days of free reports. So keep an eye on that page. I do often post free stuff on there. You just click on view and you can see the daily report for that day with trade ideas and trade signals. There you go. There's Friday's report. I give a summary at the top, and then I give the analysis underneath with trade ideas, stops, targets, everything you need to trade for the day.